BlackRock Inc. just triggered a long read on the overnight scan. Before I show you the entry, I want you to see exactly why. Evidence first, trade last. Quick ask before the evidence. If these daily breakdowns help, subscribe, like, and share. It keeps them coming. 3 checkpoints between here and the trade: retail view, institutional view, then the levels. Each one has to agree. Let's test it. On to the chart, 60 daily bars and 1 story. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $12.54. Red is our SL at $11.20. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, double bottom, inv head, and shoulders. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. New here? This breakdown happens every day. Subscribe. Then let's get into the structure. Pattern number 1. This is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks, 1182 or 92 ounce. Measured move target, $10.43.86. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 9.7%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs, $10.24.98. Measured move target, $11.74.75. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 2.4%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3. This is the inv head and shoulders. It's a bullish formation with 3 out of 3 strength. Head, $947.21. Shoulders, $1,004.58. Neckline, $1,176. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 8.5%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Key levels next. These are the prices where the market has actually made decisions before. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plus 0.39, technical plus 0.20. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 31, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Here's the layer most channels skip. Patterns and indicators are the surface. Underneath is where institutions leave footprints. Let's read them. ICT and smart money concepts. On the daily chart, the SMC bias is bullish, with a ranging market structure. The most recent order block is a bullish zone between $11.28 and $11.39.63. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $10.56.48 and $10.62.50. Price tends to revisit these imbalances. Most importantly, we just had a BOS bullish move at $1,125.0. A key structural signal that smart money traders watch closely. Volume profile now. The map of where the real volume sits and where price tends to gravitate. The point of control, the most traded price, is at $10.54.59. The value area runs from $10.396 on the low side to $11.60.90 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bullish. Price $11.56.55 is above POC $10.54.59, and inside the value area, $10.96.1160.90. Bullish lean. Now. Order flow. We estimate buying and selling pressure from each candle's close and volume. Over the recent window, buying pressure accounts for 36% of volume versus 64% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 45, signal neutral. Williams percent R is at 45, neutral. Chaikin Money Flow reads 0.06, bearish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 31% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR percent. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. The full plan is almost here. Before it lands, subscribe, and tomorrow's chart comes to you. This slide is why accounts survive. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. Okay, you stuck through the whole thing. Here's the trade. Bias is long. We'd look to enter near $1,166. Take profit sits at $1,254. Stop loss at $1,120. That puts us at 1.91 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 1.91. Horizon is roughly 50. That's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. If you're keeping score with us, hit subscribe. Results get posted publicly every week, so zoom out for a second. What we just walked through on BLK, that's a long bias setup projecting roughly 7.5% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. If this stacked up for you, say so in the comments. Trade safe. See you tomorrow. Tomorrow's ticker is unknown, even to me, until the scan runs at dawn. That's the fun of it. Subscribe, bell on, and you'll see it the moment it drops. See you tomorrow.